They say information is power. And sometimes the difference between the rich, the middle class, and the poor could just be knowledge gap. I am here to share some finance information that could help you grow your funds. Today, our focus will be on the equity investments, especially as treasury bill rates is not as high as inflation rates. Ladies and gentlemen, now let's take a deep dive into the equity investment. In the first half of 2025, the equity market recorded 4.19 trillion naira, a 61% increase compared to the first half of 2024. This significant growth signals a booming equity market and likely reflects strong investors' confidence. The big question now is, should you be investing in equities? If you're still on the fence, consider this. Many listed companies have been consistently delivering impressive returns to shareholders. In fact, some equity investors have recently seen their investment double in value. You need proof? Let's look at some numbers. I randomly picked up three companies listed on the stock exchange to show you how savvy investors are growing their wealth. Now let's talk about SFS Real Estate Investment Trust. In 2023, SFS shares were trading at 101 naira 35 kobo. As of Friday, August 8, 2025, the opening share price was held at 249 naira 25 kobo. This represents a 146% increase. Let's put this into perspective. If you had actually invested 500,000 naira in SFS, when the share price was trading at 101 naira 35 kobo, today, your total investment worth to be over 1.2 million naira. This implies you're making a capital gain of over 730,000 naira. I mean, just capital gain. Your dividend has actually not been taken into account. Let's quickly dive into the total shareholders return of these three grateful companies. In 2024, SFS delivered a total shareholder return of 98.27%. Zenith Bank returned 110%, and Fidelity achieved a return of over 20%. Looking at this in absolute term, if you had actually invested 1 million naira in SFS last year, early last year, or probably late 2023, you'd have made a total profit of 982,000 naira 733 kobo, of which over 200,000 naira came from dividends and approximately 770,000 naira from capital gains. Now let's consider this here. Let's assume we didn't actually acquire shares in 2024. We decided to acquire shares in 2025 and we bought the shares early 2025. I mean, for Zenith Bank, I think Zenith Bank share price early this year was around 45 naira 50 kobo. So if you had actually invested that 1 million naira in Zenith Bank shares, you'd have made a capital gain of 635,000 naira. And if you had actually decided, okay, you don't want to invest in Zenith Bank, you want to channel that money to Fidelity Bank, your capital gain would have been over 1.2 million naira. I mean, this significant increase in Fidelity Bank is because its share price grew from 9.2 naira to 21 naira. This is around 146% increase. And then again, if you're saying, okay, no, you're not doing Fidelity, you're not doing Zenith Bank, you want to invest this money in SFX this year, you would have still made a capital gain of over 388,000 naira, and this actually reflects 39% increase in share price. Now let's move to the next slide to compare this year's shareholders' capital gain with the annual return from treasury bills. With treasury bills, your return is around 20%. In contrast, SFS SFS delivered a capital gain of approximately 39%. Zenith Bank around 64%, while Fidelity Bank capital gain so far this year standard at an impressive 139% increase. Before you go, there are a few risks you need to watch out for, and one of them is the capital repatriation risks. If you look at the equity foreign portfolio investment graph, you would see that the foreign investor have an outflow of 576 billion naira and an inflow of approximately 559 billion naira. There's a slight difference of 3%. While this difference might seem small, if it widens significantly, it could adversely impact your share price. Another risk you may need to consider is the valuation risk. It is possible to invest in a great company but still end up with a bad investment. This happens especially when the amount you actually pay for that shares is way more than the actual value of the share price. I'll wrap up today's video by saying, always check the buying and selling volume of any company you intend to invest in. Trust me when I say low trading volume could actually make it difficult for you to sell off your shares when you need to.